journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We've got 3 hours to go, and I just went short the Dow Jones here at 42655. I put a stop at 42705. And that's all I'm risking is 250 American dollars, okay? Now, let's get on to a program that I think is going to be very, very interesting. We got a call here. Let me clean these up a little bit. We've got too much here. And then I want to get on here to, well, my goodness, my picture's in here. That shouldn't be there. Hold on. This is the thing that we want to watch today, folks. I got a very interesting email from someone. And he said, I can't remember his name, actually. I'm sorry about that because I've lost the email already. But he said there's a possibility that we could have a really big move here in treasury bonds. And I'm going to show you why. It's a very good point. I'll bring it to your attention. But there's the ABCD that we had yesterday. The low was supposed to be at 111.28. The low was 111.29. I said we should rally at least that much, and we've already done a little bit more than that. You can see we went up just a little bit more, but that's what it's done so far. I'm going to give you his case of what he's looking at. Now, we're looking at this big ABCD here on the daily, okay? Now, let's take a look at this on the long-term monthly, okay? We'll see the monthly where we are. We're way down here. See, we've never made a 382 retracement here in the last several years. Here's where they tried to tell us about negative interest rates, folks, much like they're trying to do to us on the tariffs. But anyway, that's my 2 cents worth. There's where we are. Everybody said, you know, you give us the money and we're not going to guarantee that we can give you the money back, and we're only going to charge you 0.5% to hold the money for you. And I told that to my 6-year-old grandson, and he laughed at me and he said, get a life. Well, he didn't quite say that, but anyway, that's how obvious it was. Then we had the 382 retracement. We've been in a horrible bear market now for 5 years, folks. Bonds have been the whipping boy. Now, the $64 question, are we bottoming? And there's a very good possibility for that. If we move this over way back here, okay? This is back here when Volcker, you don't even remember this, folks. Munis were at tax-free munis were at 13%. You got tax-free munis at 13%. In my tax bracket, that was a 26% return back when I was at Drexel. But let's see where we are. From the low here, way back here, to the high right up here, we're a little bit below the 50% level, but not quite to the 61. So this is the biggest correction we've had, of course, in the last 42 years. But this has been a 42-year bull market that stopped in 2019. Okay, now are we getting ready for a rally? There's a chance of that. The idea that the man proposed is something that I don't usually work with, and that is the TBT and the TLT. First, we're going to take a look at the TBT because it does look like it's got a chance here. No, excuse me, it's a TLT that he wanted. Let's get that one up here, and we'll be able to see where we are. Hold on just a second here. And there's where we are. Okay, there's the TBT. This is the daily. He's assuming this is a double bottom in here, which we see that just on those little patterns that we've done. It's held up. Again, you see it was higher. Now it's a little bit lower, so we're setting at this level. Look where these things were, folks. They were at 150. Now they're half price. They got a clearance sale down here. Now we got this big low right here at 81, and then we're trading at 86 right now. So what we're going to do is we're going to take a look at this and look on it a really long term. We'll start out with a weekly. Okay, now you see on the weeklies, we had that big low back here in October. We're matching these lows right now. This is what the gentleman's saying. I'm sorry, I can't remember your name, but I wrote down TLT and I didn't put your name. So take me to the whipping boy on that one. So there's a good chance that we have some pretty good bottoming in here. The $64 question is, what if it doesn't bottom? Now, if we look at this on a shorter term on the daily, okay? Now, the double bottom has certainly come in. Okay, now let me make this very clear. If we get below these levels right here, and we're trading at 86.36 right now, so the risk on this is only a couple of bucks to see if you're right. But if you watch the Treasury bond market, it's not as big as the Treasury notes, but if you watch the Treasury bond market, that'll tell you, because if we start going below 111, that's telling you that this thing has failed and it's headed lower. You know, that's really what we're attempting to look at here. So we'll take a look now. Look, here's the other part of this. Even if you were short bonds here, you didn't make a lot of money. Look at that. These guys on these ETFs, give me a break. This thing should be way up here if you're short bonds. This is ultra short Treasury bond. This means ultra short means they give you what do they call it, a wedgie. That's exactly what it is. It should be up here. That's why these ETFs sometimes, well, what was his name? Warren Buffett said they're going to be known as the weapons of mass destruction. Weapons of mass destruction someday. Okay, now let's get over to the wheat market, because we had a profit in wheat today, and I bring this to your attention today because I said on the video last night, I said we should take, I thought we had a $900 profit, so we took the profit at 566. It's now trading at 561. We want to buy it back on a little bit of a pullback, but we decided we had 1, 2, 3, 4 days up here, 1, 2, 3, 4 days up here. So it was still a bear market, and I didn't want to give anything back. I'm still spanking from myself from the cattle, and also missing that July soybean oil, which has gone from 52 to 48, folks. That's four handles in soybean oil in just a matter of a couple of days here. So that's what we're watching here with the wheat. So my final analysis on this TBT trade, let's TLT, let's get it up here, do it correctly, Larry. Hold on a second to make sure I get it right here somewhere. I lost it again. Just a minute. Bear with me here. Here is where we are. Okay, there's nothing wrong with that. That would be looking at the bond. As long as we don't go below 111, this looks okay. It really does. Now, we've been here. We've rallied 3 days. I mean, this is a really quiet rally. And as you can see, there's your ABCD to the downside that we were looking at. Now, you notice that on the TLT, you see it didn't make the 3.8, didn't make the ABCD. It made it in the bond itself that this is based on, but this missed it by a lot. So I'm not sure what that means, because I don't trade TLTs. But you have a good idea about this, because as long as we stay above 111 on that bond, get that thing, little rascal, right there. Get there. As long as we can stay above 111, let's get this thing up here on the daily so we can see it really clearly. I'm something's wrong in the bond market, folks. I don't know what the hell it is, but there's a problem. And here's another reasoning for it. Look at this. We have this really beautiful bottom here. What do? We rallied 1.5 points. Well, we actually rallied 2 points. We rallied 2 handles, almost like we did here, and then there was selling coming in. If it was really good, it would have done something like this. You see, we're in a major ABCD pattern right here, okay? And look what that one did, and this is not doing very much, so I'm a little suspect. That's my bottom line. We're going to take a break, and then we're going to look at the moo cows, and we're going to look at the corn and wheat and a few other things, so stay with us.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, before we get to the cattle, we have to get to someplace else, and that is over to Goldman Sachs, because we were looking at a pattern in Goldman Sachs. Now, I haven't heard the beeper go off, so I don't know what's happened. So give me a second here. There it is. You have G, there's a GS. Okay, now we get the daily up here and see if we're at that number. Well, it would have lost. Well, it looks like it certainly went above our level. See if we got to 22. The high has been 20. So we would have been selling it at 16 with a stop right above here. So we're out $3 on it right now. But this is broken. This is broken, this head and shoulders pattern, okay? Because it did go above it by a little bit. But folks, this is a $600 stock. I'm only out $3. So keep your stop working there at to be 23. So you're risking, wow, that's a really small percentage. 1% would be $6. You're risking half of 1%, folks. This is a really low risk trade. So that's what we're doing it right now. And now, of course, we already have a losing position in the let's get this up here. How we're doing here. Well, we're actually breaking even here in this thing that we put this on for the Dow Jones. The S&P has gone up now, and we've made new highs. Let's just double check, because we should have made that high right about now. That should be it. Let's just see if this is going to be the real big daddy rabbit. What we're going to do now is move this down a little bit. What I'm going to do is take it out for a second, and then we can not worry about it. And all right, now there's what we want to be watching. So we're just going to get this up here. Now, what I'm watching here is I'm waiting for the exact time, and I'm watching for all these ABCDs, and we have a big one right here off the bottom. This is the last one that we have. You can see there's your pullback right here. There's your 382, and that measures to, ta-da, 59.64. So this is where you want to be selling it right now. We've already sold the Dow Jones, so we're going to do that, and that works. Remember, this only works part of the time, so if you can't afford it, stand aside and have a few giggles. We'll see how it moves on. Okay, now let's move over here. We covered that. We've covered the the euro. This is the one, the gift that keeps on giving. We've been very short this for quite a while, but now we're really close, folks. We broke down really hard yesterday. We had a tiny bit of a rally today, but we're very close to the ABCD pattern right in here. You can see today's action. This was just, lower tops. There was your 382 earlier in the morning, and then it has a huge break to the downside, and that's just been heading down. Let's just see. I didn't even check the AI on this morning, and well, it said it was going to be down from this level, but see here at this level here, this is really not very helpful today, folks. Yeah, it caught this one right here, but it didn't do it. Well, this might be a bottom, I don't know, but this is not difficult. The one that looks interesting is the one that's working the best, which happens to be, the one in the Dow Jones, and also the one in the S&P. And that's what you look for when you're doing this. Now, here's the gold. Now, gold, that's Goldman Sachs. It starts with a G anyway. That's pretty good. Let's get this out of the way. Okay. The fact is, you stop and think Goldman Sachs only up $2 or $3 a day with the market going crazy like this. That seems nuts. Let's get up here, and I'm trying to get to, hold on a second, I'm losing my train of thought. And when you're on a train like I am, you've got to be really careful you don't fall off the tracks. All right, let me think now. We were doing the euro. Okay, we did the euro, and I wanted to go and show you the British pound because it's also been moving in a direction that we thought it was going to go. Get this up here, right here. This will all be covered in the newsletter over the weekend, folks. I got a lot of work to do because, we're really at these real key levels here on these things, and you can see even we're getting ready to make a ABCD here. In the British pound here in the next few days. It's been going down for several days. You can see we had there's your 78% level right there. That was just, wow, that was today's opening. God, I was in the euro. I didn't even do the pound. Shucks, that would have been a good one to do too. But there it is. There's your XABCD right here. In fact, if I'm going to do either one, the euro or the pound, I've got to do one or the other, because if I do them both, I'm double positioning myself against the US dollar. So you better be very, very careful of what you're looking at. And as you're watching these things, this is an hourly chart. Let's just go down to the smaller time frame if you want to quantify your risk. But look at this morning. We always say, look for those 382 retracements. Here's your British pound high. Okay, there was your first 382 retracement, was right there. And then if you looked at it again, just another about an hour later, there was your second one right there. And now if you come down again one more time, you'll see that you're probably getting ready to make another one right in here. So those things really help you. And on the way up, there's a 382 right here, another 382 right here. And that's when you intraday trading and you want to get in touch with what the market's doing. Misses it by a few pips here. That means that's why you miss this by a little bit. But most of the time, it's going to get you on the promised land without risking very much at all. That's my opinion, of course, and I'm sticking to it. So we'll get this out of the way. We'll get the pound out of the way. I don't need to see the euro anymore. And we've already covered, we want to cover the gold market. That's what we're trying to do, and I can't find the darn thing because I've got too much stuff out here, folks, trying to keep you entertained. Let's get up here to the gold. Starts with a G, doesn't it? There it is right here. We're having a little ABCD action right now, as we said here with this gold market, looking at it on a 13-minute chart. There again, last night, there was your ABCD right there, early in the morning, right about midnight. As you can see, what we were doing, a perfect 61% ABCD pattern right there. Well, you don't see it because I can't draw it that perfectly because the thing is too sensitive, but there it is. There we go. Now we get it. There it is, right to the 50% level. There was another 382 right here, and then boom, down you went. And that 382 right there, told you where that bottom was going to be, because that's going to be the ABCD leg that's going to be controlling that. If you put that down right there, and where does the low come in? Right there, 359. And look what's happening now. We're having a nice little ABCD, aren't we? Okay, so the thing we want to do, if we're really clever, is we want to see what that's going to measure to. First, what we'll do is we'll clean this out. This is, okay, we'll get from this high right here. I'll be doing 2 hours next week. And where are we at right now, boys and girls? We just hit it, 382 again. And should be starting down again. There's your 382. Here it was before. There it is again. But the thing is, there's a possibility that you could be looking at this also. But now, this is the beauty of this thing, because now if you get above this number, that's probably where it's going to go. That's my 2 cents worth, okay? All right, now that's the gold market. Remember, folks, on this long-term daily, we have made that pattern right here. And we had a big rally. But the big rally went $100 and stopped dead in its tracks. This big rally didn't stop with $100 in its tracks. It kept going. It gave you another $300. See, this one stopped. This one didn't. What's that telling you? It's telling you that something has changed in the gold market. Folks, the open interest in the gold looks horrible. I mean, people have been leaving that market faster than we used to have an open interest, folks, of 480,000 in the gold contracts. Do you know we're down to like 310 now? We've lost 60% of that stuff. Hello, operator. What's wrong with the program here? Let's be right back. Hold on.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, I had a thought while we were on a break. This is the Treasury notes, folks, the long-term monthly. Okay, and so here, did someone just ask me a question? Is that what it was? I don't remember. Oh, Mike is in the room. Mike Moore, More Analytics. Are you with us today, buddy?
Yes, sir. How you doing today, Larry?
Struggling.
Oh, sorry to hear.
No. It's okay, Mike. The problem is that I'm actually a little bit overtired than I was, so I had to scale back my trading. I made a couple of really bad trading errors. Not bad. I mean, I should have been short when I didn't get short in the cattle, and that upset me a little bit. So whenever I make a bad mistake like that, I take a day off. So I haven't really done very much today. But tell us what you're looking at. We've got some wild markets going on. So start out with the crude complex, and we'll do natural gas and some of the others. Okay?
Yep. Can you see my screen?
I think we're in good shape. Yep, I think we do. We see you just fine.
Okay. Those are my, if you need to get in contact with me, that's where you can get in contact with me. All right, we're going to jump into the crude. Okay, so the crude, we left a medium bullish reversal below a number of days ago on the 9th of May, rallied up, and then we left a minor bearish reversal above on May 15th. However, we did not negate that medium bullish reversal below. So let me climb into this a little bit with you. Okay, so the failure below 63.13, which is this level up here, put us in a bearish correction against the move up from 54.95, and we came off $3.05 into a bearish correction or trend against that. And then we held this exhaustion level right here at 60.20. Now, this was a proper structure for that. However, I'm just going to jump around a bit, so just bear with me for a moment.
It's okay.
The RBOB had similar structure with a medium bullish reversal below and a minor bearish reversal above, but this structure wasn't the same. So my feeling was, which I sent out yesterday, is we might have one more run to take out these highs here at 217.94 in the RBOB and reach up to another exhaustion level up there, which we may see similarly in the crude oil. So if the crude oil runs up, the next exhaustion level up there is going to be 64.35. And then we have a more substantial level at 65.33 to 65.65. So those might be two places that you might take a shot and get short for in anticipation of a bearish correction against this move up.
Very good.
All right, let me just jump into the RBOB here. Can you see this? This is too small. Sorry. Okay, in the RBOB, I said the trade above 212.11 to 41 now warns of decent strength and a likely run for 217.94. And that was because this overnight we'd taken out this 212.34 area, which I said a decent penetration above would likely drive us up towards these highs and possibly beyond. We tried to hit the stop below it, but didn't get it. So I think that this is going to continue to climb. We'll have to see. And then in the heating oil, similar situation, left a medium bullish reversal below. We did not leave a minor bearish reversal above, but this is run up, and I think that we may have one more run up above these highs here at 221.74 to possibly reach this exhaustion level at 224.19 and to 224.22. We'll have to see. We do have a significant bullish formation up in here. That's going to come in at 225.16 minus 8.8 of a tick per hour starting at 1 o'clock p.m. Eastern Standard Time. If we leave a maintained gap lower on Monday, or Tuesday actually, no, Monday, I'm sorry, that'll leave a minor bearish reversal above. And then in the Brent, very similar situation to the crude, left a medium bullish reversal below and then left a minor bearish reversal above. But I'd said in the analysis that that may not hold. So I said, hang on a second. We'd held exhaustion above at 66.88 with the 66.81 high, rolled over at $3.37. But I put that on hold this morning because the break back above 64.63 to 66 now warrants decent strength, likely towards 66.81. So the break back above here, we tried to hit the stop. We missed it by just a few ticks, and now we're running back up. So I think we're going to head up towards these highs and then test above here. And there may be there's a couple of exhaustion levels I don't have drawn right now, but I'll be aware of up there, especially if we go up there and then we fail back down through 66.81. That could precipitate a bearish correction against this move upward. And in the gas oil, similar situation, left a medium bullish reversal below, did not leave a minor bearish reversal above, but I said that also did not have the correct structure for a full bearish correction. So I think that this also may have another run up to test above these highs. And if so, the exhaustion level up there is going to come at 638.73 to 641.01. I think that would be a decent place to take a shot and get short, or wait for it to fail back down through these highs at 635. You have any questions on those before I go to natural gas?
Oh, very good. That natural gas is one of my favorite things. I'll tell you, that thing has volatility.
Can you hear me, Larry?
Sight for a margin of 2,900. My goodness, it blows me away.
I'm not really hearing Larry very well, so I'm going to keep on going.
Uh-oh, something's wrong. They're trying to beat me.
Okay, so the natural gas, we were bullish all the way up in here and then got bearish a few days ago. So the trade above 311.50 projected this upward, 110 ticks minimum, 230 ticks plus maximum, which I think we mentioned on the last show. We attained 730 ticks of that right up in here, and then we got bearish right below this line right here. So the trade below 369.60 had brought in 373 ticks of pressure into the open right here. And then I cautioned, and also we also had a bearish call below 365.50, which I said projected this downward 85 minimum, 235 ticks plus maximum. We'd attained 332 ticks going into this morning. And our caution of this exhaustion right here at 335.30 to 332.50, and we basically held it with a 330.60 low, and it bounced a bit. Now, if we take this out, there's only one more left down here at 318.50. If we take out 318.50, they're dropping down to 370. It's good.
Okay, Mike, we're going to pay a few bills. We'll be right back with more analytics. Mike Moore. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Back, folks, with Mike Moore of More Analytics. Please continue, Mike.
Thank you, Larry. So just wanted to do a little recap of what the spreads are doing, because it's very important if anybody's trading oil to understand what these spreads are doing, because they can make a huge difference in your profitability while your risk is relatively the same. So this is the RBOB to heat spread, the spread between unleaded and heating oil. And you can see here I said we were likely in the final stretch of the move up from the lows with possible exhaustion at 539 to 57. We held this with the 538 high, 583 high, and it rolled over 11,060 ticks. That was holding this exhaustion level here. We rolled over. Then we got bearish below this line, bearish below this line, bearish below this line, came all the way down, got bearish below this line. It didn't work. And then the break back above there is when I said to be out of all shorts, be long, and looking for this to rally for days/weeks. And that's where I said that right down here in the bottom of this paragraph. These are all on hold. Trade back above negative 486 to 88. Now warns of decent strength likely for days/weeks and a possible one for the highs. So this is basically telling you, like, if the market's coming off, would you rather be short the RBOB or short the heat? And you can see here in just a few days, that's a difference of 4,800 per contract. And likewise, on the opposite direction coming up, that's another 2,000 per contract on the way up. So you need to understand these things, because they let you know if you want to be short crude, is that the best thing to be short, or should you be short the RBOB or the heat instead? And it's a huge financial difference throughout the year. So that's one of the things that I include in my analysis is the RBOB to heat spread, and then these cracks. And I have different projections in either one of those to help you understand which of those you should be long or short relative to the crude on any given day. Okay, so jumping into the natural gas. We have been bullish in this stretch up here and then turned bearish a couple of days ago. Okay, the break above 311.50, which we talked about on previous shows. I said projected this upward 110 minimum, 230 ticks plus maximum. We went on to attain 730 ticks of that, and then got bearish below this line right here, below 369.60. And then again below 365.50, which I said projects this downward, 85 minimum, 235 maximum. We attained 332 of that to the downside. I know I'm just recapping that from before, but we're holding this exhaustion right now. If we take this out, then the next one's down here at 318.50. Okay. You want to jump to the S&P 500?
Yes, sir. Everybody has an interest in that. That's for sure.
Okay. S&P 500. I'm not going to recap all the higher time frame stuff. You all know, watching the show, I've been bullish in general from 3502. We saw well, I must have deleted something on here by mistake. All right. I'm going to skip that for right now. But more recently, the trade above 5409.25 has brought in 548.75 of strength. That was the break above this line that we talked about on a previous show. We also got bullish above this line, rallied up, pulled over to it a couple times, got bullish above this line, then bullish above this line, and now we're approaching this final line right here, which is very key. That comes in at 59.7385 plus 8 per hour. But right now it comes in at 58.54.15. No, excuse me. Comes in at 59.74.15 plus 8 per hour, starting at 1:30 p.m. Eastern Standard Time. And I said in here that a decent trade above there should bring in continued strength and possibly a run for the highs of December of 2024. If we fell down through this line right here, which is going to come in at 58.13.15 plus 122 per hour starting at 1:30 p.m., that will project this downward at least 200 points. Okay. And then the gold. We left a minor bearish reversal above here, then a medium bearish reversal here, and we've been rolling over. And then I changed that bias yesterday morning. So there's failure below 34.8390, brought in 360.6 of pressure, a couple of the bearish formations in here. All those have been put on hold. I said the break back above 31.4820 now warns of decent strength, likely for days. So that was the break below this line here and break back above. We rallied up here for 107.6 and then rolled back over and bounced off of it right here. So now we have a couple bullish formations just above. If we take this one out at 32.2920 minus 11 per hour starting at 1:30 p.m., that will project this higher. And then there's another line just above it as well that comes in at 32.3620 minus 9 per hour starting at 1:30 p.m. If we break above either of those decently and back down through them decently, then I would be out of longs and short again, looking for this to run to the downside. A maintain gap higher on Monday would also be bullish. And then finally, the Bitcoin. We've been bullish in general from the break above 16,275. We've seen 92,685 per coin on that. A lot of other bullish calls in here. I'm not going to go through. More recently, the break above 76,495 brought in 29,775 of strength. So those are bullish calls from above here, 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 here. And then more recently, since the last show, I think on the last show I'd said the decent penetration above 88,785 to 89,040 projects us upward 14,500. We'd only attained a portion of that on the last call, but we went on to attain 17,230 of that, fulfilling the 14,500. But it had a plus after that also. That's why we're still looking for more. Now we've just broken above another formation right here, but I said that. Even though that warrants a higher trade, it would not suggest being long above it, but I would suggest being short on a break back below it, and that line is going to come in at 103.443. minus 28 per hour, starting at 1 o'clock p.m. Eastern Standard Time.
Very good.
Anybody
Mike,
have any
you
questions?
want to tell? No, I think we're doing pretty good. I have a question.
Yep.
What is the best way for someone to contact you if they have a question about the spreads or any of the other things that you work with? What is the best contact information? Stay with us, Mike, because we want you to post that when we come back from the break, okay?
All right,
Mike
thank
Moore
you.
of More Analytics, folks. Stay tuned.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks, with Mike Moore of More Analytics. Mike, tell the folks how they can reach you. And we have a question first. Before that, it's from Daryl in Culver City, California. He's asking, of your 3 things that you look at, the crude oil, the crude oil, gasoline, and heating oil, which is your favorite to trade, or do you trade the spreads? That's what his comment was.
You can do either. I mean, I would say that if you're looking at crude, the reality is if you're looking at the spreads and looking at crude, the spreads are going to dictate that you should be long or short the RBOB or the heat 85 to 90% of the time, more so than they're going to dictate that you should be long or short the crude, because the unleaded and the heating oil lead the direction of crude 85 to 90% in either direction.
Wow.
By a significant amount. And that's not my opinion. You can look at it.
Make a great case for it. That's for sure. That's for sure.
Yeah. And not only that, but it's like when you get in on those, a lot of times they'll have similar signals in each one of them at the same time with relatively the same risk. But if you get on the right one, which the spreads dictate which one you should be on, you'll make far more money throughout the year.
Wow.
And my analysis, I know I go through this stuff kind of quickly, but if you came on board, I explained to you how to use this. You get the analysis every morning and a follow-up video podcast every evening. So you're like connecting on both ends of the day every day.
Next time we do this, Mike, we want to go through how you prepare this and what the folks will be getting, because this is important stuff, in my opinion, if you're going to trade this complex.
Yeah, absolutely. Absolutely.
Okay.
If you're just looking at the crude and not looking at the spreads, it's like you're flying half blind,
Well, like the man in the land of the blind, the one-eyed man is king. Have a wonderful weekend, everybody. Thank you, Michael Moore. We'll see you soon, folks. May God bless.